QuickBooks Online 2021. Apply customer deposit or credit to an invoice. In other words, we got a prepayment from a customer in the past, which we will now apply in the format of a credit to the invoice that we will create to complete the sale, complete the transaction. Let's get into it with Intuit's QuickBooks Online 2021. Here we are in our Get Great Guitars practice file. We're now going to be creating an invoice for a customer who made a deposit in the past. Let's first open up our financial statements. We're going to right click on the tab up top and duplicate it. Then we're going to double duplicate, right clicking on the tab up top again and duplicating a second time, completing the double duplicate. And then we're going to go down to the reports on the left hand side. We're going to be starting off with our balance sheet report. Opening up the balance sheet, and then we'll range change up top, ending the range at 123121. Running that report, closing the hamburger, holding control, scrolling up to get to that 125%. Back to the second to last tab over here, going down to the reports. We're now going to be opening up our P&L, profit and loss income statement, selecting that report. Then we'll go back up top again, range change it to the ending point, that ending point being 123121, and run that report. Then we're going to close up the hamburger. So last time, I'm going to go back to the balance sheet now. We had a scenario where someone came in, ordered a guitar, and then they put a down payment in on it. To see this, let's take a look at our flow chart on the desktop version. You don't need the desktop version to follow along here. We're just looking at the flow chart. And so we had someone come in and say, hey, I'd like this guitar. For whatever reason, we couldn't give it to them at that point in time, but we would get it for them. And so we said, hey, in order to commit to the purchase and make it worth our while to get it for you, since it's a kind of a large thing, then how about you give us a down payment now to lock us in to this transaction? So that means that we got a receive payment in essence, increasing the cash that we received, that we put into undeposited funds in this case, and the other side then going to basically accounts receivable, which would normally be reducing an accounts receivable related to a particular customer, this time reducing accounts receivable, but not reducing an invoice from a customer, leaving what we would call a credit to the customer, which we can then apply out to the invoice, which we're going to be creating afterwards. Now remember that when we did this, it's a little bit funny in that logistically it works quite well, because what we end up with is that negative receivable instead of what we should have in normal financial accounting, which would be a positive liability. And the reason that works, and we talked about this last time, so I won't go into a lot of detail in it, is because we want to have these things tied out in the customer field so that we can use that to tie out the receive payment and the create invoice instead of having an account in the liability account, which will make it more difficult to do that. So let's go back on over to the reports then. I'm going to go back here. Let's open up another report, which is going to be the Receivable Report by Customer Report. So I'm going to right click on the tab atop, and I'm going to duplicate it again. So this is the triple duplicate. We've duplicated 3 times at this point. So we've completed the hat trick of duplications. And then we're going to go down to the reports down below and scrolling down to the Who Owes You section. So scrolling down, Who Owes You? We want the Customer Balance Detail Report. Customer Balance Detail, and then I'm going to close up the hamburger. So what we have here is this negative amount for Anderson. That's what we mean by negative receivable. So we have a negative receivable as opposed to a liability, which would be an unearned revenue positive liability. But this works great here logistically because now we can make the invoice, and the system, because it's in the customer area, should hopefully allow us to apply over this prepayment to the invoice, matching those two things out, which is of course what we want to be seeing happen. So let's say we're going to say now we got the guitar, and we're going to say, hey, customer Anderson, Mr. Anderson, we got the guitar now, so let's complete the transaction. So we're going to then go to the plus button, and let's make an invoice now. And so we got the invoice. I'm going to hold down Control, scroll down to 100% so the invoice doesn't do, or is less likely to do funny stuff. And then I'm going to type in Anderson, Mr. Anderson, tab, and we'll tab through this. So there's going to be the date. Let's put the date on the 18th this time. So we'll make the date as of the 18th. And we will then add the actual guitar down below, and it's going to be a Gibson USA, so GIUSA, so the Gibson USA, that's the one we want. The sales tax should be applied here, so we have the sales tax on there, and I'm going to adjust the sales tax for our generic like 5% sales tax. I'm going to see the math. I'm going to go down and override this for our generic 5% practice problem sales tax, and they ask for a reason why, and I say other, and say confirm and close it. So there's our sales tax at the $19. Now we have our invoice, but they gave us a $250 prepayment before this point in time. What we would like to do is apply that out here. Now we can't apply it to the actual invoice. We got to actually record the invoice and then go to the next step to the receive payment to match out the invoice and the receive payment. So we'll take a look at that step. What is this invoice going to do? Obviously, it's going to be increasing the accounts receivable by the $399. The other side's going to be then going to sales for the amount of the $380. The difference going to sales tax, which will be a liability account of the $19. We also know that the inventory is going to go down by the amount driven by this item, but not shown on the invoice. And the other side's going to go to cost of goods sold. So I'm going to go ahead and save that. Let's go ahead and save that information. So let's do a quick check. If I go then to our balance sheet, let's go to the balance sheet. I'm going to say run that report, hold down control, scroll up just a bit. Now, if I go into the accounts receivable, and this is where our focus will be, so maybe we'll just kind of focus in on here since we've seen the invoices recorded in the past, right? So here's going to be our invoice. So here's Anderson, there's the $399, and there's the $250 deposit that should be applied to that $399. We could see that also if I go back up top in our detail report by customer, go into the tab to the right. Let's refresh this report, freshen this report up. And in the Anderson item up top, we have the invoice. It's not showing the payment right now. Let's scroll back up top, customize this report, and go to the filtering options. And I would like to see the paid. I want to see all items here. So we'll say all items in the filter and then run that report. And then in the Anderson section, we've got that $250, and that $250 we would like to be applying out to that $399 invoice. Now, sometimes QuickBooks will kind of read our minds after that point and actually do the application, which it did here. So now if I go back into this invoice, which we just made, and I go into this invoice, then it should have tied it out. So if I go down here, there's the $399, there's the $250 that has already been applied. So they basically applied it out. So if you want to print the invoice, then you want to go back into it and make sure that when you send the invoice, you're sending the amount with the amount that will still be due, which is going to be the $149. Now, if for whatever reason QuickBooks couldn't read this thing and couldn't link it up, then of course you go to, I'm going to create a new tab, duplicating this tab up top. I'm going to close this invoice back out in our new tab. And then you can go to your new option up top, and we would go to the receive payment. And if it hadn't applied these two things out, then you would have in the receive payment screen, typing in Anderson Guitars. We have Anderson Guitars. And then we'd have our invoice, and we'd have the payment that we could basically be applying to that invoice if it had not yet been applied out. But of course, it did it basically automatically for us here, so that's great, and we've got it tied out. So well, before I leave out here, do you want to leave? I'm going to say no. Obviously, we still have the invoice with the remaining balance that's going to be due. So we're still expecting payment in the future for the remaining balance. And once again, if we're going to provide the invoice to the client at this point, we want to make sure that we provide the invoice. I'm going to say I want to leave this time. Yes, this is going to be the actual invoice. Applying out the invoice that has the application of the $250 so that we do have the remaining balance down below of the $149. I'm going to close this back out. We could check this in a few other areas. If I go to the sales item on the left-hand side, and then we go to the customers tab up top, which is in essence the customer center, then we can go back down into Anderson Guitars, and this is another area where you can kind of confirm what has happened with the prepayments here. So we then have the payment that was gotten before, and then the invoice that happened later, which we have this partial payment to, so it has been applied out there. So let's go back up top. I'm going to close up this tab. I'm going to close up this invoice now. And then in Anderson Guitars, we're now in the customer balance detail. Note at this point in time, our accounts receivable is back into good standing. So we're back in good standing. We don't have any customers with negative receivables at this point. And so at this point in time, we don't have any problem with unearned revenue. And notice that that unearned revenue is a timing difference. So it's kind of like a temporary problem that could be in place, right? When we have unearned revenue and we have it then recorded as a negative receivable, then we kind of have a problem. We have a negative receivable rather than a positive liability. And if we were to generate our reports, like year-end reports or month-end reports that we want to present on a proper accrual basis, we would have to do that adjusting entry at the end of the time period. However, if the payment has been received or if we have invoiced the client at this point, then it's not a problem because now we're back to the normal point of having a positive accounts receivable. So we will do one more of these and we'll see the adjusting entry process if there is a negative accounts receivable. There's also another method that you can use to record the accounts receivable. It's a little bit more complex than just having like the negative accounts receivable here, to use the unearned revenue and set up items in order to basically record it to unearned revenue. So if you're in like a type of industry where all of your sales are basically unearned revenue and you would rather basically record everything down there possibly, we might go over another method that you can use to do that, which again, it's a little bit more complex after the whole practice problem is over, and we'll consider that. But this is where we stand for now. Let's go ahead and then go to the last tab and let's open up the trial balance. So I'm going to hit the drop down. We're going to go to the reports down below, type in for the trusty TB trial balance, run that report and scroll up top, range change it to ending point 12/31/21, running the report, closing the burger, holding down control, scrolling up. There we are at the 125. You can check your numbers here, and we will then also print out the trial balance so you can check your numbers at that way as well.